If you're over 50 and depending on Social Security, SSDI, SSI, or VA benefits, you need to hear this because the truth is your check is about to change, and most people don't realize how much of a difference it can make. Not only this year, but for the rest of your life, and I'm going to break it all down in plain English so you don't miss a single dollar. Every year, the government reviews the cost of living and decides whether benefits need to rise. And that review is called the cost of living adjustment, or COLA, which is designed to protect seniors and disabled Americans from falling behind as prices for food, housing, gas, and medicine climb. So imagine your benefit like a step on a staircase. Each year, inflation builds another step, and COLA is the tool that lifts you onto it, permanently locking in a higher base that never goes back down, meaning that even if this year's increase looks small, it compounds over time, and after 10 or 15 years, that tiny bump can add up to thousands of extra dollars you would never see otherwise. Yet here's where most seniors get frustrated. The index used to calculate COLA, called the CPIW, is based on the spending of workers, not retirees. And it doesn't fully capture how much you spend on prescriptions, doctor visits, or specialized care, which is why sometimes the raise you see in your check feels like it barely scratches the surface of your real expenses. But here's the good news. Once a COLA increase is applied, it's yours forever, and it stacks with every future raise. So the key takeaway is this. Even if the extra dollars look modest in January, they're building a stronger financial foundation under your feet, and understanding how this works allows you to plan ahead. Set priorities for your budget and avoid being caught off guard, because the worst mistake you can make right now is ignoring the details and letting this increase slip by without making it work for you, and what I'm going to reveal in the next section will show you exactly how this plays out in real retirement checks. Now let's get into the heart of why these checks are going up and what that actually means for you, because too many seniors think the government is giving away free money when in reality it's simply an adjustment to keep you from falling further behind every fall. Officials measure something called the Consumer Price Index for urban wage earners and clerical workers, or CPIW, and while that sounds technical, picture it like a shopping cart full of everyday goods: bread, milk, gas, rent, doctor visits, bus fares, and if the cost of that cart goes up compared to last year, your Social Security check rises by the same percentage. But here's the catch. The basket these doesn't really match what most seniors spend money on, because older Americans put more of their income into prescriptions, medical treatments, and utilities, and those costs often climb faster than the official index, which is why you sometimes feel like your check went up on paper, but your wallet didn't get any relief. This is one of the biggest frustrations I hear from clients who ask, how can they say my income went up when I still can't afford my meds? And the answer is that COLA is an imperfect shield. It helps, but it doesn't block every hit. Still, don't underestimate it, because even a small percentage increase becomes a permanent raise that compounds for life, meaning every future adjustment stacks on top of the last. And this cumulative effect is like adding bricks to a wall, slowly building a stronger structure to protect your financial stability. So while you may not feel the impact overnight, those extra dollars keep adding up year after year, and over a decade or two, the difference can be thousands of dollars that you would never have seen if you had ignored the process. And that's why understanding COLA is not about today's groceries only. It's about protecting your future income stream. And in the next part, I'll show you with real numbers exactly how this raise plays out in retirement checks, so you can see the long-term picture clearly. Here's where we need to get very real. Because even though COLA is supposed to keep you from falling behind, many seniors tell me it feels like the raise barely covers a trip to the grocery store, and they're not wrong. The formula used is tied to working-age households, not retirees, and that means things like prescription drugs, medical equipment, long-term care, and even heating bills often rise faster than the official numbers. So while the government may announce a 3% increase, your pharmacy bill alone might have jumped 10%, and that's why many people feel cheated. But the important thing to remember is that even if the raise seems too small today, it's not a temporary bump. It becomes part of your permanent base benefit. And that base is what every future increase builds on, so picture it like compounding interest in a savings account. If you start with a little and keep adding, the growth over time becomes significant, and the same is true here. What looks like only 30 or 40 extra dollars today could snowball into thousands over the next decade. Let me give you a simple example. If your benefit is $1,900 a month and COLA is 3%, that's roughly $57 more every month, which equals about $700 in a year, and then the following year if inflation triggers another raise. That new percentage is applied on top of the higher $1,957 base, not the old number, so the effect keeps stacking year after year, and this is where planning becomes critical because most people shrug off a $50 increase and let it disappear into daily expenses. But those who plan ahead decide exactly where it should go toward prescriptions, utilities, or an emergency fund. And they make that money stretch instead of vanish. And here's the truth no one tells you. The raise alone won't fix your financial struggles, but ignoring it guarantees you'll never get ahead. So the smartest move is to treat each COLA like a permanent raise at. Work and use it wisely, and in the next section I'll explain how this plays out specifically for retirees, so you'll see clearly how much difference it can make in your household. When it comes to retirees, this adjustment isn't just numbers on a government chart. It's real money showing up in your account, and the way it's applied is simple but powerful. Whatever your monthly retirement benefit is right now, the COLA percentage gets added to it. So if you're receiving around the national average of $1,900 a month, a 3% adjustment means roughly $57 extra every month, which turns into nearly $700 over the course of a year, and if your benefit is higher than average, the dollar amount of your raise will also be higher because it's based on a percentage. But here's the part many people don't realize. This increase comes no matter what age you started drawing benefits, whether you filed early at 62, waited until your full retirement age, or held off until 70 to maximize your check. The percentage increase applies across the board equally, and that means no one is left behind. The real power shows up when both spouses are collecting, because both checks go up, and over a 10-year period, that compounding effect can add tens of thousands of dollars to your household income, and even if one partner passes away, the survivor's benefit reflects those increases too. Which is why I tell retirees to stop looking only at the short-term bump and start thinking about the long-term ripple effects. Because these adjustments can influence everything from your ability to keep up with healthcare costs to how much you leave behind in estate planning. And here's another layer that gets overlooked. Those small raises can also change your tax situation, because if your total household income edges past certain thresholds, a larger portion of your Social Security may become taxable. So the bottom line is that COLA doesn't just pad your monthly check. It shifts the way your entire retirement picture looks. And if you understand that now, you can plan smarter for the future. And in the next section, we'll talk about disability benefits, which are directly tied to these same increases and matter even more for people who can't supplement their income by working. If you're receiving Social Security disability insurance, you might sometimes feel left out of the conversation because so much of the news focuses on retirees. But here's the truth. SSDI is tied directly to Social Security retirement, which means that when retirees get an increase, so do you, and that's a big deal because people on disability often face higher medical bills, limited income, and fewer chances to pick up extra work on the side. So even what looks like a small raise can cover pays, medical equipment, or transportation for appointments. Let's make this real with numbers. Imagine your monthly check is $1,300 and the COLA is set at 3%. That gives you about $39 extra each month, or nearly $470 across a year, and if your benefit is $1,800, that same percentage turns into about $54 each month, close to $650 in a year. And here's where it gets even more important. If your spouse or children receive auxiliary benefits through your SSDI record, their checks go up too. So this raise is not just for you. It can lift your entire household. Now think about the bigger picture, because every single COLA increase becomes permanent, which means each future raise will be calculated from that higher base. So over time, your SSDI can grow significantly even if each annual raise feels small. And yet, many people never realize this until the money simply appears in their account, losing the chance to plan how best to use it, and that's a mistake. Because planning in advance allows you to stretch those extra dollars instead of watching them disappear into daily expenses. So don't fall into the trap of ignoring the notice or assuming the bump won't matter, because when you look at it year after year, those adjustments could mean thousands of dollars more in lifetime benefits for you and your family. And in the next section, I'll explain how COLA works for SSI, which is even more sensitive because it's a needs-based program where every single dollar counts. Now let's talk about Supplemental Security Income, better known as SSI, and this program is different from retirement or disability because it's not based on how much you worked or earned in the past. It's strictly needs-based, which means it was designed for people who have little or no income and very few resources, so the monthly payment is already low, and that's why even a tiny cost of living increase can make a huge difference. The maximum federal SSI payment today is under $1,000 for an individual and a little more for couples, so when you add a 3% COLA, that might only be about $25 to $30 extra per person or $40 to $50 for couples. And I know that doesn't sound like much, but for someone living on SSI, every single dollar is the difference between being able to buy a little more food, paying the power bill on time, or simply breathing easier in a budget that always feels suffocating. The good news is that this raise, just like with Social Security and SSDI,
becomes permanent, so you won't lose it next year. It stays built into your base. But here's the tricky part most people don't realize, because SSI is needs-based. That higher payment can sometimes affect your eligibility for other programs like Medicaid, SNAP food stamps, or housing assistance, and I've seen people panic when they get a letter saying their benefits are changing just because their SSI
went up. But the important thing is to stay calm and respond quickly, because in many states, there are protections, exemptions, and appeal processes to make sure you don't lose medical coverage or food assistance just because of a small increase in your SSI check. The bottom line is this: if you rely on SSI, you have to pay attention not only to the money that shows up in your account, but also to any letters or notices that arrive in the mail. And you need to check your online account regularly, because missing a notice could cause you to lose other critical benefits. And in the next section, we'll dig into VA benefits for veterans and their families, because what many people don't know is that those payments are also directly tied to the same COLA adjustments. If you're a veteran or the spouse or child of a veteran receiving VA benefits, you need to know that you're included in these raises too, because every year when the Social Security Administration announces the official COLA percentage, the Department of Veterans Affairs applies that exact same percentage to VA disability compensation, and that means you don't get left behind when inflation rises, which is critical because veterans and their families often carry heavier financial burdens like medical costs, therapy, prescriptions, or even housing expenses that are higher than average. Let me put this into perspective with an example. If you're a veteran rated at 100% disability and receiving about $3,700 a month, a 3% COLA adds around $111 every single month, which is more than $1,300 in just 1 year. And if your rating is lower, say 40% or 50%, you'll still get the exact same percentage raise applied to your benefit. So while the dollar amount will be smaller, the protection against inflation is there for you as well, and it doesn't stop with disability checks, because dependency and indemnity compensation, known as DC, which goes to surviving spouses or dependents of veterans who have passed away, also rises with the COLA, meaning families who already sacrificed so much don't lose ground financially as the cost of living climbs. I've personally spoken with veterans who tell me these annual increases make the difference between paying their property taxes on time, being able to afford a new pair of glasses, or catching up on rising utility bills. And while many see it as just another small adjustment, over time these raises stack up and protect long-term financial stability. So don't underestimate them, because the power of COLA for veterans is not just in the immediate relief. It's in knowing your benefits are tied to the same inflation protection as Social Security, giving you peace of mind that your service and sacrifice continue. to be recognized, and in the next section, I'll explain the timeline of when you'll actually see these higher payments land in your account, because that's the question most people ask first: when will I get the money? Now that you know who gets the increase, let's answer the question that's on everyone's mind. When will the money actually hit your account? Because this is where confusion causes a lot of unnecessary stress. Here's how it works. The Social Security Administration calculates the COLA in the fall, usually around October, but you don't see the new amount until your January payments. So if you're checking your bank in December and wondering why nothing has changed, don't panic. The raise doesn't take effect until the new year, and even then the exact day you see it depends on your birthday, because Social Security pays retirees on a staggered schedule. If your birthday falls between the 1st and the 10th, you're paid on the second Wednesday of the month. If it's between the 11th
and the 20th, you're paid on the third Wednesday, and if it's between the 21st and 31st, you're paid on the fourth Wednesday. So depending on when your birthday falls, you could see the new amount in early,
mid, or even late January. SSI works a little differently. Those payments usually arrive on the 1st of each month, but if the first lands on a weekend or holiday, the payment gets issued the last business day before, which is why many SSI recipients actually see their new COLA adjustment at the end of December, even though it's technically the January check. VA benefits follow their own schedule too, but most veterans will see their raise in their January deposit at the start of the month. So the main point is this: if your December check looks the same, don't assume you were left out. The increase is coming, it's locked in, and it will be in your account by January. And the fastest way to confirm your updated benefit is by logging into your My Social Security account, or va.gov if you're a veteran, where you can see your exact new monthly amount as soon as it's processed. And in the next section, I'll show you the smart steps you should take right now so you're not just waiting for the extra money, but actually making a plan to use it in the way that benefits you most. Knowing that the increase is coming is one thing, but the smartest seniors are the ones who take action before the money even hits their account, because without a plan, that extra cash will disappear into everyday expenses and you'll hardly notice it. So the first step is to log into your My Social Security account online, and if you don't already have one, please make it a priority to set it up, because it's free, secure, and the quickest way to see exactly how much your new payment will be and when it will arrive. And if you're a veteran, you should do the same with your va.gov account. The second step is to sit down with a pen and paper and map out a simple budget. And I don't mean a complicated spreadsheet. Just write down your main expenses like groceries, medicine, utilities, transportation, and any debt payments. Then ask yourself, where will that extra $50 or $70 a month do the most good? Will it keep the lights on, pay for prescriptions, or finally allow you to set aside a little emergency fund? Because deciding ahead of time gives every dollar a job and prevents it from vanishing. Third, be aware of how this increase could affect other programs like Medicaid, food assistance, or housing support. Because sometimes a higher Social Security or SSI check can technically change eligibility, and if you get a letter in the mail saying your benefits have been reduced or canceled, don't ignore it. You usually have the right to appeal and protect your coverage. But you must act quickly. Fourth, think about taxes, because many seniors don't realize Social Security income can become taxable if your combined income passes certain limits, and while the COLA raise might seem small, it could be just enough to push you into owing more. So talking to a tax professional early in the year can save you from surprises. The bottom line is that these raises aren't meant to be windfalls. They're meant to protect you, and when you treat them like permanent pay, raises instead of loose change, they can improve your stability. So don't wait for January to arrive before you make a plan. Start today, and in the next section I'll explain why even though the raise may feel small at first glance, its long-term impact on your lifetime benefits is far bigger than most people realize. Here's the part that almost no one thinks about. Even if this year's raise looks small, the effect over time is massive, because once that increase is locked into your base benefit, every future raise is calculated from that new higher amount. And that means your income is compounding year after year like interest in a savings account. So let's put this into numbers. If your benefit today is about $1,900 a month and you get a 3% raise, That takes you to roughly $1,957 and the following year. When another adjustment comes, it's not applied to the old $1,900, it's applied to the new $1,957, and that cycle continues for the rest of your life and over 10 or 15 years. That snowball effect can easily add up to tens of thousands of extra dollars in lifetime benefits, money that can help you cover rising healthcare costs, pay property taxes, or simply keep food on the table without as much stress. I've seen couples where both partners collect Social Security and each check rises with every COLA, and over time the combined household income is dramatically higher than what they expected when they first retired. And even after one spouse passes away, the survivor's benefit continues to reflect all of those past increases. So the protection doesn't vanish, it carries on. Now, here's the other side of the coin. This compounding effect can also push some households into new tax brackets or change eligibility for certain support programs, which is why planning and reviewing your finances each year is so important, because ignoring these changes might mean losing benefits or paying more in taxes without realizing it. But when you understand the long-term picture, you stop treating COLA as a minor bonus and start seeing it as a permanent tool that builds financial security step by step. And in the next section, I'll explain how these adjustments aren't just about retirees, but also protect disabled Americans and families who rely on SSI and VA benefits, showing that COLA truly reaches across generations. Many people think these raises are only for retirees, but the truth is that the cost of living adjustment protects a much wider group of Americans, and that includes people with disabilities, low-income seniors on SSI, and veterans who sacrificed for the country, as well as the families who depend on them, because when a COLA is announced, it applies across all these programs, lifting not only retirement checks, but also SSDI payments, SSI benefits, and VA compensation, and that matters because each of these groups faces unique struggles. Disability recipients often juggle medical bills with no way to earn extra income. SSI recipients live on the edge where every single dollar can decide whether the lights stay on. And veterans and their families often carry ongoing costs for care, housing, or therapy that never seem to stop rising. So while the increase may look small on paper, the real impact is spread across millions of households that depend on these payments for survival. Imagine a disabled parent whose children also receive benefits on their record. When their check goes up, so do the kids' payments, giving the whole household a little more breathing room. Or think about a widow receiving DC from the VA. That benefit rises too, so she doesn't fall further behind while facing higher grocery and utility bills. And this ripple effect is exactly why COLA matters so much. It's not a gift. It's a safety net designed to stop vulnerable families from sinking when prices climb. But here's the part most people miss. Because these increases touch so many programs at once, they can sometimes create complicated side effects with taxes, Medicaid eligibility, or housing support. And if you don't pay attention, you could miss a notice or lose help you still qualify for, which is why knowing your rights, opening your mail, and checking your online accounts is crucial every single year, because awareness is what transforms COLA from just a number on paper into real financial protection. And in the next section, I'll show you exactly when and how you should monitor these changes so you never get caught off guard. One of the biggest mistakes I see seniors make every single year is assuming that once the COLA is announced, the job is done and they can forget about it. But the truth is that the raise is only part of the story. And if you don't pay attention to how it's applied and what else it triggers, you could end up losing money instead of gaining it, because Social Security, SSI, SSDI, and VA all have their own payment schedules, their own ways of sending out notices, and their own rules about how changes interact with other benefits. And that means you can't just sit back and hope for the best. You need to monitor your accounts closely. And the easiest way to do that is to log into your My Social Security account online or your va.gov portal if you're a veteran, because both of these sites will show your updated payment amount before it ever arrives in your bank, giving you the chance to plan ahead. And this is where so many people go wrong. They never set up the account. They don't Check their mail, and by the time they realize something changed, weeks or even months have passed, and maybe they've already lost eligibility for Medicaid or food assistance simply because they didn't act on a notice in time. Think about how frustrating it would be to get a letter saying your benefits were reduced when all that happened was a small increase in your SSI check. And the sad reality is that it happens to thousands of people every year. But here's the good news. You don't have to. Be one of them if you stay proactive, check your accounts, and treat every piece of mail from Social Security or the VA as urgent. And remember that once the raise is locked in, it's permanent. So the only thing that can cost you money is failing to respond when something else shifts around it. The lesson is simple. COLA is protection against inflation, but your responsibility is to stay alert and make sure nothing slips through the cracks. And in the next section, I'll break down the smartest ways to use this new money so you're not just receiving it, but truly making it work for you. Getting a raise in your Social Security, SSI, SSDI, or VA benefits feels good for a moment, but here's the truth most people don't want to admit. Unless you make a conscious plan, that extra $40, $60, or $100 a month will vanish into daily spending and you'll barely notice it. So the smartest thing you can do right now is treat the COLA increase the same way you would treat a raise at work. Give every single dollar a purpose before it even arrives. Because when money has a job, it works for you. But when it doesn't, it just slips away. Start by writing down your top priorities. Maybe it's covering higher grocery bills. Maybe it's paying for prescriptions that have been eating into your budget. Or maybe it's building a small emergency cushion so you don't have to put expenses on a credit card when something unexpected comes up. And once you know the priorities, assign the raise directly to them. For example, if you're getting an extra $70 a month, decide right now that $40 goes to food, $20 to medicine, and $10 to savings, and then stick to it. Because without that structure, the money will disappear into things like takeout meals or little purchases you won't even remember. Another smart move is to look at your debts. If you still owe on credit cards, car loans, or medical bills, directing even a small raise toward those balances can save you big money in interest over time. And don't forget about taxes, because for some seniors, even a modest COLA increase can push your combined income high enough that more of your Social Security becomes taxable. So speaking with a tax preparer early in the year can save you from surprises later. Finally, think about the long term, because this raise isn't temporary. It's locked in forever, and each future increase will be stacked on top of it. So planning now means you'll be building stronger financial habits that benefit you year after year. And in the final section, I'll bring everything together and show you why. Understanding COLA is not just about this year's bump, but about building lasting security for the rest of your life. At the end of the day, the cost of living adjustment is not a gift from the government. It is a protection that keeps you from falling further behind as prices rise, and while many seniors shrug it off as a small bonus, the reality is that COLA is one of the most powerful tools you have to preserve financial stability over time, because once that increase is locked into your check, it never goes away. It becomes part of your new base. And every future raise builds on it like bricks stacked one on top of another, creating a stronger wall of protection around your retirement or disability income. But protection only works if you know how to use it, and that's why I've spent this time walking you through what the adjustment is, why it exists, how it's calculated, who benefits, when you'll actually see the money, and most importantly, how to plan so that extra income doesn't slip through your fingers. And if you take nothing else from this video, remember this: even small changes today compound into thousands of dollars over the years, and the difference between seniors who stay afloat and those who constantly struggle is often just knowledge and preparation. So log into your account, open your mail, talk with your family, and make a plan. Because no one else will do it for you. And now I want to hear from you. If you still have doubts or questions about how this year's increase affects your situation, leave a comment below. I'll personally go through them and do my best to answer, because my goal is simple: to make sure you understand your rights, use your resources wisely, and never leave money on the table. So take this knowledge, apply it, and give yourself the peace of mind that comes from knowing you're not only surviving, but protecting your financial future year after year.